Thank you, Madam Chair. I'll actually follow up on that question and ask Mr. Brown or Ms. Eberly, do you agree with the gentlelady's assertion or question that community banks should be exempt from Basel III?
I would say that we received more than 2,500 comments from community banks about the Basel III and the standardized approach capital rulemakings that we put out for a notice of proposed rulemaking. We're in the process of considering those and take very seriously the comments and concerns that community banks have raised. It's not our intent to have an unintended consequence on the community banking industry.
So what are those comments indicating, and what is your position on that question?
So we're in the rulemaking process, so we can't talk about our position, but the comments that have been raised fall into three areas primarily. One has already been mentioned, and it's the implications for mortgages. So it's the risk weighting for mortgages through the standardized approach. Another is the treatment of trust-preferred securities, and a third would be the treatment of accumulated other comprehensive income, which is a fancy way to say depreciation or appreciation on securities. So those were the three primary issues that were raised. We're taking all of the comments into account. We're reading every comment letter and working with the other agencies as we go through the process to come up with the final rule.
Mr. Brown, you indicated in your opening, your written testimony, I think you might have been quoting the FDIC community banking study, that the surveys of the community bank presidents indicated that it wasn't the cost of any single regulation that was going to break the bank, but it was the cumulative cost of everything put together, which is exactly what I'm hearing from the community banks in my districts, Pennsylvania, especially around Bucks and Montgomery County. They're saying that they have to hire compliance people that they didn't have a couple of years ago. They need to train their employees. They're now responsible for outside consulting fees, bringing folks in, increased costs of both internal and external auditing. And, of course, all of this is taking away from their ability to, it's a distraction, their ability to make the loans and their ability to have the capital to make those loans. What is your plan over the course of the next year to address those issues? And when might this subcommittee hear back on that plan?
Well, our entire community banking initiative is designed to learn more about these issues. Those are some of the things that we've learned thus far, and on the supervisory side, to try to address them through some of the technical assistance and other initiatives that Ms. Eberly has described thus far. And I don't know if you want to elaborate on some of the steps in the community banking initiative that we're undertaking.
So the ones that I mentioned were bankers did ask us for more technical assistance. So they expressed that they valued the directors' colleges that we put on. These are training sessions that we offer through trade associations in each of our regions for bank directors to participate in and learn about emerging issues. We host teleconferences. We've had workshops where we'll focus on a specific topic like allowance for loan and lease losses and troubled debt restructurings. Those have received high praise, and we've been asked for more, and we've committed to do more. We're trying to look at ways to make those offerings available more broadly, so like a web-based offering so that it could be available on demand, but to provide that kind of training so that institutions don't have to rely on outside assistance to get that.
Is there a specific work plan for this year, for 2013, to address the cumulative impact of all those regulations on community banks?
So the specific work plan that we have in place is geared towards the technical assistance offerings, and we do have a work plan, yes.
I agree with what Ms. Maloney indicated, that during those very difficult economic times, this past couple of years, it was community banks that were literally holding the communities together. They were the ones making the mortgage loans. They were the ones making the small business loans. You know, what are the statistics show during those last couple of years on the number of those small community banks, the charters that have gone out of business versus new startups? Are we seeing more community banks go out of business and fewer starting up?
We have seen that, and that's consistent with the economic cycle. We saw it during the last crisis as well. We're starting to hear discussions from consulting groups that are representing groups of organizers that are interested in chartering community institutions. So that's
What are you doing to encourage more charters?
to encourage more charters. We're open to receiving applications for deposit insurance. It really is more of an economic fundamental that we're waiting for groups to come forward. We try to be supportive of the community banking industry through our Community Bank Initiative and our other outreach efforts.
Thank you.
Gentlemen's, thank you. Gentlemen's time has expired. Mr. Scott for 5 minutes.